Are the big banks out to kill Afterpay and Zip? Could the Aussie dollar go to $1.10 again? And why all this talk about death taxes? I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money. Paul, are the big banks out there to kill Afterpay and Zip because they're eating their lunch?
Well, look, Peter, I don't think these new cards are going to do the trick. I think you wrote
the
about
0%
the
ones.
0% ones where you pay a fee each month. I'm not sure they're going to be. They're sort of a cross between a credit card and
a debit
card with a little bit of a loan limit. But look, both National Australia Bank and Commonwealth Bank have come out with them. I'm not sure they're going to be the answer to their problem. Look, certainly, I mean, we've seen the big move is in the US with PayPal. Look, this is an issue that the big banks are concerned about. It's one of the reasons why Commonwealth Bank invested in Klarna and is in partnership with Klarna in Australia. I think the other banks are worried. I think the market still probably saying that the odds still favour the Afterpays and the Zips of this world being able to grow.
Afterpay share price has fallen, so does Zip. Now, you thought it might fall further. You've seen it bounce lately.
It has bounced off about $70, and I guess it'll be up again today. So, look, I still think they're way overbought, Peter, but at the moment, the momentum is still with the companies. Look, my argument for the overbought position really rests on sort of the comparative value between Afterpay and Klarna. Now, Klarna is the
out of Sweden. CBA's got a share in it, and it's bigger than Afterpay.
It's got 85 million customers globally. Afterpay's got a little over 10 million customers. It's got 2.5 times the revenue of Afterpay. And in the US, which is the key market, bear in mind this is more a European thing than an American thing.
Klarna's very European.
But in the key American market, they're growing at about the same rate and off the same base. So just in valuations, and this Commonwealth Bank shareholders have been pleased about this. Commonwealth Bank paid $300 million for its 5.5% share. That's now worth $585 million US.
Isn't it good to see banks making money?
Yeah, good, according to a recent fundraising. But on a market cap basis, bear in mind Klarna's unlisted. It's valued by the market in terms of the last fundraising just the other day at $14.5 billion. This is in Australian dollars versus Afterpay's $21.5 billion.
But we know
Afterpay, Klarna's got 5 times the customers, 2.5 times the revenue. The markets are out of sync on this, but look, you can't fight the trend.
And also, we Aussies know a good Aussie is better than a good Swede, that's for sure. Let's go to the next one.
Just come back to your point. It's going to be a lot tougher, and where they're vulnerable is in the merchant. Most of the money that Afterpay makes, and Zip does the same, it makes it out of the fee that the merchant pays. About 4 to 4.5% per transaction.
And that could be squeezed.
That's what they're vulnerable. I reckon PayPal's move in the US is the most. It's really the big move in the last X number of weeks. I don't think the new cards from CommBank and NAB are going to be the silver bullet to.
But the bottom line is that people who are tipping $100 for Afterpay anytime soon, that's going to be a long way off if this company grows.
Yeah, look, I know the bell's gone, but I just checked a couple of things this morning.
The bell.
But I wrote some notes here. This is according to current broker analyst forecast. So Zip, currently valued at $6.75. That implies an 11.1% upside. Afterpay, the analysts have got a consensus valuation of $81.72, 8.9% upside. But bear in mind, the range on that, UBS is still sticking with its valuation of $28.25.
Stubborn UBS.
It went up from $26 to $27 to $28.25. There are brokers out there with $105, $106.
Yeah, it's the extraordinary world of Afterpay. Let's go to, could the Aussie dollar go to $1.10 again? I don't think so, but it is on the way up.
Well, it's on the way up, and we've been saying that for, I think, about 2 months.
We've been tipping it here.
It's over 73 cents. I think it's going to see 80 cents. It's about the US dollar weakening, Peter, fundamentally, but also there are other reasons. Commodities have been well supported. Australia's done the vaccine better. And look, it's just, I guess we bounced so quickly again off those low 50s when it got there in the crash.
And yesterday, the Reserve Bank's minutes indicated that they're not keen to cut the cash rate from 0.25 down to 0.1, as some economists think. Now, that has given the Aussie dollar a little bit more strength as well. But the bottom line is, as the US budget deficits get bigger, history shows the US dollar goes down, and that budget deficit is blowing out big time.
And perversely, it's good when the central bank starts to worry. And if anything, that actually encourages markets, right? Because that means they realise there's some underlying strength to it. So in some way, the Reserve Bank coming out, and I reckon you're going to get some more jawboning on this, Peter, right? I reckon you're going to see more and more of that in the months ahead. But in some ways, that's actually a positive for the currency because markets actually like, they don't say take on the central banks, but they know, as I said, there's a bit of logic in what they're saying. So that's, I reckon, a positive for the Aussie dollar.
Okay, one final thing. A lot of talk about death taxes. Paul Keating, he wants all old people to take out a loan and use that for their home care packages. That's like a death. It's like, well, it means that when they die, they'll get that loan paid back, and the people who are supposed to inherit this won't get it. Then we saw this morning Saul Eslake, the economist in Tasmania, former ANZ chief economist. He wants what Saul wants?
He wants some more. He wants death tax.
A death tax, a real death tax. Slug you when you die, and also a whole lot of other things.
And Treasury talking about an assets test on the recommendation on the putting back the family home back into the calculation of assets.
Why so much on death taxes, Paul?
Well, I guess someone's got to pay. It's all very well for Paul Keating, for someone who was only ever a politician, but we know how much.
Be nice,
be
Paul.
nice. But he's not. It hasn't actually been tough in retirement for Paul Keating, right? That's all. I'll just leave it at.
$5,000 a speech is
but
pretty good.
But he wants more pensioners to borrow money. Now, I guess where he's coming from is someone has to pay. No one wants to pay a higher GST. That's the obvious tax that needs to be increased.
That's what we need to do, higher GST.
We need state premiers to have a few guts here, right? And actually stop worrying about border closures. They actually need to get off their high horse and say, it's in the interest of everyone to have a higher indirect tax like the GST.
Well, the poor old Kiwis, they got 15%, and they're not going down the Google.
Australia's 10% rate is spectacularly low. But it's
UK's 20, France is 20, Europe's 20. We're 10.
We're 10, but because there's such reluctance even to have a discussion about it, we've got to find some other ways to raise money.
I'm sure we'll get some dislikes talking about the GST.
We will get some dislikes, but it's the most obvious thing to do. And we need, as I said, the Labor Party and some of the state premiers to get over this and say this is, increasing the GST would be a better solution than playing around with things like payroll taxes and death taxes and other really preventative things.
One of the great things that Saul was suggesting, great in inverted commas, is why don't we reduce the threshold on the payroll tax so more small businesses can pay the payroll tax but at a lower rate? I think...
what's Saul been smoking or injecting up on or whatever it is? I don't know. Right?
There's a great TV show called Better Call Saul. In this case, Better Not Call Saul. I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money.